Hey guys, good morning. It's your agent Wes. We're here at the Moore Group to interview mortgage loan officer Kyle Larmy about the benefits of owning over renting and what you need to know to get a mortgage going. Let's go talk to him. Kyle, what's up?
What's happening, Wes? Welcome.
Good to see you.
You
Good to
too.
be here.
Long time no chat.
Just wanted to ask you a few questions about the benefits of owning a home over renting and steps that people need to take if they want to own a home.
Okay, yeah, that's easy.
Yeah.
Just for your clients to know why they should be buying and not renting.
That and the steps they need to take to move from being a renter to being a homeowner.
Oh man, that's easy. We do that every day.
I need you to be my guy, Kyle.
100%.
Kyle, what are the benefits of owning your own home versus renting?
Man, it's really a no-brainer, because we're in a position right now in the market where you can purchase a home and have a mortgage that's less than what a rent would be each month, which is crazy if you think about it. And not only that, but speaking of inflation, if you've noticed, grocery store prices are going up, asset prices are going up, stock market's going up, doggy coins are going up, everything's going up. But one thing that hasn't really, in my opinion, been affected by the inflation and all the money printing that the Fed is doing is rent. And as we move forward, if you're a renter, and you think you're safe at your $13.50 a month, well, you're wide open and vulnerable to whatever your landlord decides to, do or say or charge.
It's so true.
So when you buy a home, almost all mortgages now are 30-year fixed rates. I don't even have to tell you about interest rates and how unbelievably low they are, even in our lifetime.
No, I've never seen anything like this.
It's insane. And we weren't in the real estate game, 5 years ago, 10 years ago. It's very normal for an interest rate to borrow money 6, 7, 8%.
Yeah.
Unfortunately, we're in this environment where rates are almost artificially held low on purpose to try to help stimulate our economy and get us going in the right track. But when you buy a home, you can fix your rate and fix your mortgage, your principal and your interest payment for 30 years. So even if the value of your property goes down and you're underwater $100,000, you may not get that equity or that advantage of selling your home and taking a profit, but nobody can take away your mortgage payment or your house. And if you are a renter, rent could be double in 2-3 years. I mean, it's so hard to know how much it's going to affect.
It's so true.
And then obviously the tax advantages of owning a home, you build credit. I mean, there's so many different benefits to owning a home. Having the ability to, if you want to build a tree house in the backyard, you don't have to ask anybody for permission. So,
Right, yeah.
It's exciting.
Cool, yeah. That makes a lot of sense. I mean, why would you rent if you could get locked into a mortgage? Because I think the biggest point that you made was 5 years from now, rents are going to be double. But if you get a mortgage right now, 5 years from now, you'll be paying the same rate that you are now.
100%. As long as you make that mortgage payment, nobody can take that away from you. I've had a lot of people, not a lot of people, but it definitely comes up in conversation where people are worried that, this might be, price. I'm waiting for prices to come down. I want to buy, especially young people that are in a position where they can get a home. They're like, well, my mom, said, or I feel like I'm buying too high and I'm going to wait for prices to come down. Some people are waiting for, like a market crash. But the thing they don't realize is let's say there's a market crash and property values go down, 10 or 20%, it would be a devastating thing. But what happens is if the market gets bad, people lose jobs. And if the market gets bad, people get stuck in whatever home they might be in, so they may not be able to sell and move up or change. And so it's going to slow down. It's going to eliminate a lot of the people that can buy homes. And in that event, if the market did go down, you're going to have way more people needing to rent instead of buying. And instead of this buying frenzy that we're in right now, imagine if instead of having 10 people making offers on a home to buy, imagine if those same 10 people were in line at a new rental listing.
It's almost like that now. I can't imagine. I mean, the demand for rentals is so unbelievable. Trying to find a rental for someone is 10 times more difficult than trying to find a house for someone, as crazy as the market is now. So it would be a disaster if that happened. So, I mean, I think it's just so forward thinking to give your family and yourself that security of knowing this, we have a place to live. No one can take this away from us. No one can raise the price on it. No one can sell it out from under me. I hear stories every day, Kyle, from people who are looking for a place. And, my landlord decided to sell the house, and we've only got 30 days to find a place. And at that point, we don't even have time to close on a house.
100%.
So we're scrambling to find a rental or something temporary, and it's just a huge waste of money and effort. And these same people that could have been in a position to buy have put themselves in a kind of a catch-22. And it's just going to be, I mean, even now there's a lot of people living in hotels that there's no reason for it.
It's funny, dude, because so many people talk about the market and multiple offers, and man, my buyer's offer can't get accepted, and they went with a 20 grand over sticker price, and but nobody's talking about the rent. And the quicker that you can get into a position to buy that house, you don't want to be trying to get a rental if the market is, like you said, in the rental market, you're seeing it, and you're seeing how difficult it is even to get that. So you don't want to wait until you've got 100 people trying to stuff themselves through that same door. So the quicker that you can do. So I messed up there, but one thing I would say is, in addition to that market crash and making it more people needing to rent, another factor is if values did go down, rates are going to go up. That's how the market is, right? So if so it's almost like these low rates are assisting in the values going up, because if you were buying that same house at that same price 5 years ago and your mortgage payment was $350 more expensive because of the interest rate, then you may not be looking at that tier, and less people would be willing or able to pay that price. So the market would eventually cause that house value to go down. And also some of the programs. So right now you can buy a house with 3% down as a first-time home buyer, 3.5% down even if you're not a first-time home buyer through FHA. And those programs, it's almost the same type of program as the low interest rates, artificially low. There are stimulus plans or ideas that help the market move. So if the market got really difficult and there was volatility in the value, it's very likely or possible that the government requires larger down payment. They say, hey, you know what?
Wow.
It's risky because houses have been going straight up forever, and now we're seeing that houses values can go down. Well, if you're only putting 3% down, you could close, and a month later, you're $50,000 underwater. So those programs of little or no down payment, those could easily go away. Not to mention mortgage insurance is really a hedge, or it's something that homeowners get charged to protect the lender in case there's a default. But the rate of which PMI is charged can fluctuate. And as a matter of fact, in 2020, right after the pandemic kind of started, mortgage insurance for conventional loans, that rate did increase. So people saw moving forward when they closed on their homes that mortgage insurance is more expensive than it was a year prior. And if the market gets difficult, even a 10% correction, it's very easy for Fannie Mae and Freddie Mac to come out and say, oh, you know what? mortgage insurance is double the price because there's a lot
Wow.
more risk in the marketplace.
So these people who think they're trying to save a nickel by waiting to buy when properties go down 5-10% or whatever in value, which might not even happen, but let's say it does, that's going to cause rates to go up, and they're going to end up paying more every month because of the higher rate, and it's going to be going to the bank and not to their equity.
So it's possible, right? We don't know. I mean, if we knew, we'd be shooting this video on the yacht, right?
Exactly,
On the
yeah.
coast. But the idea is, for sure, the higher the value the properties are going up, the higher the market goes, the lower the interest rate, and vice versa. So they kind of play hand in hand. But that PMI and the risk threshold and the low down payment options, those are available now. But, 20, 30 years ago, it was the American dream to work hard, earn a good living, save your money, work your, 10, 20 years, work your ass off, and then finally take that hard-earned life savings and go buy your white picket fence, beautiful home, and retire, and you got your family. That was like home ownership, and slowly it's turned into you can borrow $500,000 you never bought a home before with 3% down for 3% interest rate.
Right.
Would you loan me $1,000 if I agreed to pay you back over 30 years at 3%?
No.
Because inflation, right?
Yeah.
I'm gonna pay you in wheelbarrows of dollar bills that 30 years ago were worth something, and 20-30% of our money supply was created last year. So who knows, right? So it's putting ultimately the debtors and the people that are servicing the debt, the money, the people that we owe our mortgage payments to, they are taking on way more risk than a buyer, even if the property value goes up or down, because they're hoping that the value of the dollar, and inflation, basically they're hoping that it doesn't happen, because if there's any inflation over 30 years, they're going to end up doing the math at the end of the mortgage, and they're going to be like, damn, we didn't make any money.
Yeah.
It still helps the bank because of the money flowing and the liquidity going in and out, but there's no profit being made. So what I tell people that are on the fence or waiting for a market correction, especially young people, first-time home buyers, is if you're worried that you're going to buy a house and then the market, your house goes down 50 grand, who cares? Because really, again, you're protected, you're locked in for 30 years. As long as you love that home and you can see yourself living in it through a market change, so 10 years, make sure it's the right size, it's a good location. Who cares if it goes up and down? Because people have the wrong idea, and it's what got people in trouble in 2008, is that you're buying a house for, speculating that you're going to be able to sell it to somebody else at a higher price. But that's really not what it's all about. It's almost like a bonus. Can you generate equity over time? Absolutely. But it's really about homeownership, and in an inflationary environment, it's about locking in your payment. It's about protecting yourself. It's saying, I don't want to be exposed to the market and the conditions and whatever pandemic 3.0, if it's the rabbit flu comes out, I don't want to deal with that. I want to lock in right now and be protected, because a first-time home buyer can get approved for an FHA mortgage with a credit score technically as low as a 500 if they have 10% down. But for the 3.5% down program, they got to be a 580 credit score or above. But if the market got weird, that 580 minimum credit score requirement, the government can very quickly say, hey, now it's 650. It's not the bank that decides, it's the government.
Yeah, these FHA loans are government subsidized, so it's just a decision away from changing.
And the proof is that when rates in 2020 got really low and there was a huge crunch for everybody wanting to refinance. I had 50 conversations in one day about everybody's wanting to refinance because rates are super low. What the government did to regulate that is they came out and they added a lender level price adjustment, and they said if anybody wants to refinance now, it's going to be 0.5% in points higher, and they put a government overlay. Another example, this happened a few months ago, is now if you want to purchase a second home or an investment property, the government is now charging an additional interest rate charge on those properties versus a primary.
Wow.
So, it's very easy, especially if there is any kind of market change, for the government, which they never do, they always try to fix things. It seems like they never do, but it's very easy for them to say, hey, you know what? Now you got to be a 700 to buy a house. So young people, Wes, your customers, especially the young ones, if you can qualify for a mortgage right now, I would highly encourage your clients to get pre-approved and find a home now and lock it in before that opportunity gets taken away.
Very good point. Thank you, Kyle.
Of course, anytime, Wes. You're the man.